Alright, hello and welcome to Camel Finance. I'm your boy Camel, and we've got the CPI data coming out on Wednesday, so we're going to be covering that today. Just before we do, I saw this trending and I wanted to point this out, maybe for a slightly unexpected reason. I just saw this trending on Twitter that this stuff has now been prescribed to 17,000 people in the UK, whatever. Why am I bringing this up? Well, I'm bringing this up because if this actually turns into a trend, if this actually builds momentum and we get a full UK legalization, then what I would expect to see is a green rush, a UK green rush. So if you don't know what a UK green rush is, this is essentially a gold rush, but with everyone flying out and racing to grow and manufacture this stuff, right? So I would expect to see the FTSE AIM All Share, which is like the penny stock exchange in the UK, absolutely flooded with new growers, with new dispensaries, with new businesses. What I would expect is that none of them need to have any fundamentals whatsoever, because it will all just be a giant hype mania phase. They had this in America before. We've had this in the 70s with the gold rush. We've had this in 2012, the green rush in America, where they got legalization in multiple states and then dispensaries and growers were popping up. And the stocks, whether they had fundamentals or not, whether they were making decent revenue and profits or not, all of them went parabolic. So there's enormous opportunity if the UK can get a legalization, then we could repeat some sort of green rush in the UK. So I'm just flagging this because I saw it trending on Twitter. If it builds momentum, then keep it in the back of your mind, because the moment any of these green stocks make it onto the FTSE AIM All Share, you can expect multiple 100, 200, 300% rallies across the board, and it should be fairly easy money. So I'm keeping my eye on this. If we get any progress, I'll report back, and I'm only flagging this from a finance perspective because, as I said, there will be an awful lot of pump and dump setups coming onto the all share if that's the case. So the big news, of course, is we have the CPI data. So July's reading will be available on Wednesday, and it's really going to be quite a pivotal moment for markets, because if the CPI number, if the readout is higher than last month's, okay, then we can expect markets to crash. All long positions will likely be off, all risk will likely be off, in my opinion, and shorts will be what I'm looking for. If, however, we have indeed seen peak inflation, then I expect a big face melting rally to occur, huge risk on rally, and it looks to me, we'll get into the charts in a minute, but it looks to me like this is already somewhat being priced in. It looks like the market has already kind of made its mind up that we've seen peak inflation, and so we'll get to that in just a moment. Before we do, I wanted to point out a couple of tweets. Some people seem to have this figured out, still can't get over that their solution to inflation is to raise taxes and print more money, okay? Print more money. What's wrong with these people? Other people, like Raoul Paul, quick pulse check on inflation in 18 months' time, headline CPI will be, and then choose one of these at random, whatever one you think it's going to be. Nobody really gets it, okay? Nobody, and I'm going to prove this to you. Then scrolling down, somebody asks, which one did you pick? Raoul says, sub 2%. I don't know what realm of delusion this guy is existing in, but I'm going to prove to you exactly why. He's saying, and I think based on the year-on-year data, that, okay, maybe we get a bar down here, and then we're going to drop back to here. So this means in February 2024, he's predicting we're going to be sub 2%, okay, back down here, by February of 2024. This seems like an irresponsible call to me. I've got a clip here, because don't take my word for it, right? Why don't you listen to Lynette Zhao? Lynette Zhao is an ex-central banker and now runs ITM trading. So you can do your research on her, figure out how important she is. She knows what she's talking about. Don't take my word for it. Just watch this 25-second clip.
And I think that will happen when the Fed does a pivot, when there is enough pain in these markets and the Fed does a pivot. I think they're going to print money to make what they did in 2020 look like chump change. And I think that we're already at the beginning of the hyperinflation. It goes slow, 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 then it goes fast. But you can see the prices going up all the time.
Okay, so we're already at the beginning of hyperinflation. There's no other way to service the debt, remember. There's no other way. Yes, they can pivot. Yes, they can start to pause interest rates hikes. Maybe that comes in September like I've been predicting. Maybe it comes at the end of the year. Maybe they don't care about goosing the stock market and everything else for the elections in November, for the midterms. Maybe they don't care about that. But whether it comes in September or it comes as late as early next year, It is coming. They are going to have to pause these rate hikes. Then they're going to have to reduce the rates again because there's no other option. This is a mechanical system. That's what makes it so predictable. This is a mechanical system. They have to do these things. And then when they go back to that, they have to print more money. I'm going to play this clip again because it's so important. It's only 25 seconds. Listen to what she says.
And I think that will happen when the Fed does a pivot, when there is enough pain in these markets and the Fed does a pivot. I think they're going to print money to make what they did in 2020 look like chump change. And I think that we're already at the beginning of the hyperinflation.
It's going to make 2020 look like chump change. You know, I've been saying this for months. That we're probably going to go to 100 trillion for the dollar in terms of the M2 supply. That's a 4x from where we are right now. To say that we're going to be back below 2%, I know Raoul Paul is somebody I respect, somebody I got a lot of time for, but this call seems bananas to me. I'm open to being wrong, okay? But I do not see a realm. I do not even see a parallel universe that exists in which we come back to 2%. There's just no way, in my opinion. Everyone's talking about Blackrock and ignoring the fact that one of the richest countries in the world has been buying since 18K, which is Saudi Arabia. Why are the Saudis putting their money in Bitcoin? Why is Blackrock getting into Bitcoin? Ask yourself this. Are they going to do this? Are they going to put their money into Bitcoin if inflation is going to be sub 2%? Why do you need an inflation hedge? Why do you need the hardest form of currency on the planet if we're going below 2%? Okay, why? There's no reason to. Why is it, if we're going to go below 2%, that gold is breaking out and about to make a multi-cycle rally to new highs? Why have you got the cycle king Bob Lucas calling for this? Why have you got Peter Brand, classical charting wizard, calling for 3K gold, alongside people like me who have been doing this for longer than I care to remember, if we're going to 2% inflation? Because this is bonkers. This is a ludicrous and irresponsible call. So with all that said, just remember that we've got the CPI coming out. There's nothing to say that the number couldn't be higher. It could be higher, in which case you're going to need to protect longs, and you're going to need to have that situational awareness to know that you're going to have to protect longs. However, if we've seen peak CPI and we start to see the inflation print come down in the short term, then it stands to reason that we're going to get a face melting rally, and that I believe the highs in the stock market could be tested. I believe we could see as high as 42k for Bitcoin. Make sure you keep your eyes peeled because Wednesday's CPI print is going to be very important. I expect a lot of volatility, a lot of chops, a lot of stop hunting before we get a bit of direction, but I also expect that when we do establish a direction, it's going to be explosive. Bob Lucas makes a good point here. You don't go looking for a buy, it comes to you. So don't be chasing these rallies, okay? Have your thesis, have your setup, and wait for the opportunity to arrive. So with all that said, let's take a look at the charts. We've got the dollar here starting to break out. It looks kind of weak though, doesn't it? Is it going to waddle up like I expected it to? Quite possibly. We'll have to keep an eye on that. Take a look at the yields while we're here. Yields still kind of in this sort of consolidation range. It's not very decisive yet, and I think likely we won't get true direction until Wednesday. What I am noticing though, Bitcoin showing some strength. This is what I like to see. The big question here is, can we make a new high? We need to make a new high so that the structure of this remains bullish. I don't want to see a lower high or more consolidation. We want to see this push up now. I'd like to see at least 25.5 if we can get up here, and preferably I think that a rally to 28k and 30k is certainly on the cards for now. Ethereum is having a crack, isn't it? Again, it's very nearly there. I want to see this high taken out. I want to see 1800 cleared, and I think that opens up at least 2000 if not 2200. So I'll be looking forward to seeing if we can actually get that. MATIC is still kind of getting hung up, but I would suspect that if Ethereum can clear this high and start to make a run, it will drag MATIC and a few other altcoins up with it. So that's looking positive. The stock market, longs above here is an option, and targeting the top of this range. But remember, we need to see what the data says on Wednesday, because you have to be open to something like this. And then on Wednesday, the data comes out, and if it's bad, then we're going to be dropping off. Okay, so remember to be open to that. The Nasdaq, long and strong. We continue to push, looking for this breakout. Again, it's very pivotal, isn't it? I don't think it's a coincidence that we're right into resistance as we are expecting this CPI print. So again, CPI print high, expect the market to go low, and if we get a lower CPI print indicating peak CPI, then you can expect a breakout and a big ripping rally. UKX continuing to push, still in an uptrend, still established, so not much to report there. Oil's still waddling its way down to my first target area. Is it going to stop here and break out, or is it going to continue to fall? Of course, the CPI print will probably show up in here. Gold, long and strong, open to a half cycle low, remember, just got to be aware of some pullbacks. Not going to sweat them though. We will see how this reacts. Again, I expect possibly not too much direction until Wednesday, but I wouldn't be surprised to see a big rip and rally here. Could maybe change this line if we use the wick from up here. Now that seems to be fitting better, so that seems to be the level the market's respecting. A breakout from here will be an add to a position from me. And let's take a look at the miners. Yeah, miners doing okay, aren't they? Again, I expect sort of some consolidation. And then further upside from the miners. Going to continue to try to push this over multiple weeks. So that's it from me for today. Hope you found value here. If you did, drop a like on the video. Subscribe if you're not already. Help us get to 100 subs. Getting dangerously close to that. Trade safe this week. Be open to volatility. Have a plan for both sides. Nobody knows what this print's going to be. Many people have their suspicions, including myself. I think we may well have seen peak inflation. But we don't go guessing, we don't go predicting, we wait for the data and the charts to set up, wait for everything to come to us. So continue to do that. In the meantime, take care, all the best from me, cheers, bye.